Hey everyone, and welcome. We're going to tackle a huge question we get all the time. When is the right time to actually buy an annuity? I mean, should you do it now? Should you wait a few months? Let's dive in and get you some real clarity on this.
Look, I totally get it. The whole idea of signing a long-term contract, yeah, it can be a little nerve-wracking. The biggest fear people have is that they're going to make a permanent mistake with their money. And that anxiety, it can just leave you completely frozen, not knowing what to do. So you're probably sitting there thinking, what happens if I buy an annuity today and then, bam, interest rates shoot up tomorrow? Or am I locking up my money right when inflation is high and I could miss out on a better deal down the road? These are totally valid worries, and honestly, they're the exact thoughts that keep a lot of people on the sidelines.
But here's the thing. While those worries are completely understandable, they might be blinding you to the biggest risk in the market today. The real danger right now isn't about buying a little too soon. It's about waiting too long, especially when interest rates are heading south.
So let's talk about the specific environment we're in right now. Because as of November 2025, the whole financial landscape has really shifted. And here's the crucial takeaway. We are moving out of the highest interest rate period we've seen in more than a decade. The Federal Reserve has already started cutting rates. And what that means for you is pretty simple. If you wait even just a couple of months, you are very, very likely going to get a less attractive deal. Waiting is probably going to cost you.
So how does this actually play out? Well, it's a pretty direct chain reaction. When market interest rates go down, the benefits that insurance companies can offer go down right along with them. We're talking lower fixed rates on things like MGAs, smaller guaranteed income payments, and just weaker growth potential on other types of annuities. The whole value proposition just shrinks.
And on top of all that, there's a quirky little pattern in the annuity industry we call the year-end effect. Every year, toward the end of the year, carriers just get slammed with applications. So to slow things down, a lot of them will actually lower their rates and benefits in December on purpose. Now, they might raise them back up in the new year, but in an environment where rates are already falling, there's absolutely no guarantee they'll come back to the levels we're seeing today.
Okay, so that's the market reality. Now let's get a little more specific and talk about how this whole timing thing applies to different kinds of annuities. Because, the right time isn't just about the market. It's about matching the right product to what you're actually trying to achieve.
So let's compare two of the most popular options. First, you've got your multi-year guaranteed annuities, or MYGAs. Just think of these as being like a CD from an insurance company. They are super sensitive to interest rates. Then you have fixed indexed annuities, or FIAs. They aren't quite as sensitive to rate changes, and they're really designed to protect your principal while still giving you some decent growth potential linked to a market index.
And this brings us to what is, without a doubt, the most important question of all. Seriously, forget the market for just a second. The question you should be asking yourself isn't, when should I buy? It's, why am I buying? What is the financial problem you're trying to solve here? So let's match the timing to your goal. If your goal is guaranteed income for the rest of your life, well, buying sooner just gives your income base more time to compound and grow. If your number one priority is just keeping your principal safe, then buying now locks in today's higher benefits before they start to fall. And hey, if you're worried about liquidity, needing access to your money, then you should be looking at specific FIAs that have penalty-free withdrawal features built right in.
All right, let's get really specific now. Who is this advice actually for? Because an annuity is definitely not a one-size-fits-all kind of thing. Let's take a look at who really stands to benefit from acting now and who should probably just wait.
Buying an annuity right now is a fantastic fit if you are a retiree who plans on turning on that income stream within the next, say, 1 to 5 years. It's also perfect for pre-retirees who want to take some risk off the table and protect a part of their portfolio. Or really for anyone who's just plain tired of the stock market roller coaster and wants to move from risk to security. And this is just as important. Let's be crystal clear about who shouldn't buy an annuity right now. If you think there's any chance you'll need all of this money in the short term, an annuity is not for you. Same goes if you're carrying high-interest debt, like a big credit card balance. And finally, if you don't really truly understand how these products work yet, your first step isn't filling out an application. It's getting educated. So what's the bottom line in all of this? It really comes down to one simple idea. In today's economic environment, the probability of annuity benefits decreasing is just far, far higher than the chance of them improving. And that right there really puts the risk of waiting into sharp focus. Trying to figure all of this out on your own can feel, well, pretty complicated, but you don't have to go it alone. Here at the Annuity Expert, we can help you understand all your options, compare the different products side by side, and help you lock in today's best benefits before they're gone. We're here to help you avoid those expensive timing mistakes. And the best part is, our services are always completely free for you.
So if you're ready to take the next step, or even if you just have some more questions, our team is ready to help with a free consultation. You can give us a call at 770-755-1565, or you can find us online at annuityexpertadvice.com. Don't wait around for rates to drop even more. We really look forward to helping you out.